The following is a presentation of TFNN. Good morning, Market Kickoff, with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Happy Friday, 9:06 a.m. Friday morning. We got about 25 minutes to go until the start of trading, and you got markets in positive territory to kick things off. As our man Basil Chapman would say, the day is young. It is very young, folks. Opening bell in 24 minutes from right now. A lot of volatility throughout the day yesterday in both directions. We picked things up 38 points, just shy of 1% right now in the S&Ps. Zooming in on the action yesterday, you reach a high intraday just at about 3 p.m. Eastern time. That high in the S&Ps, you're looking at a price level just above where we're at right now. We reach a high of 39.43. And boy, by the end of the session, you were under 3,900 yesterday. You closed it at about 38.97, I believe. You make a low of 38.90 late in the session, right after the close. Yeah, 4 p.m. Eastern time, that bar, as we dip down to about 38.90. We're positive overnight, but man, we'll see where the action goes when we open. NASDAQ 100, you're up 1.25%. We're back above 12,000, 12,026. You got the Dow up 229 points. We had a 30,000 handle on a couple occasions yesterday in the Dow. We're currently trading 31,435. Russell, 1794. We were below 1750 early in the session yesterday for the Russell. Bitcoin back above 30,000, 30,170. Crude catches a bid yesterday from a low of 103 early in the session. We just peaked above 110 recently. We're trading just under that level at 109.34. Gold contract, quite a day to the upside yesterday, early at 1810. You almost make it to 1850. We chop around overnight. Gold flat on the session right now at 1840. Excuse me, we jump to notes and bonds. You're getting a little bit of higher price and lower yield. We got the 10-year, 2.82%. That's a move for you, man, from Wednesday. 118 and change. You trade up almost 2 full points from Wednesday to Thursday. 120.10. We back off a bit just in the last few minutes, though. Look at that run from 8 in the morning. We were trading at 119.17. You got the 10-year up 12 ticks. You got yields pulling back a bit just in the last hour or so of trading. And we jump over to the volatility index. We got the VIX. Early yesterday, when the markets looked at their weakest, you could say, 33. Markets trade higher throughout the day. VIX waning to 28.75 right now for the VIX. Over in Europe right now, you get some positive markets. You get the DAX up 1.6%. FTSE up 1.6% as well. CAC Roll up 1.25%. Over in Asia right now, positive as well. Nikkei up about 1.2%. Shanghai up 1.6%. Hang Seng up 3% over in Asia. All right, where do we kick things off? We're just going to kick it off with a little bit of general action. And I'm going to start things off with one of the articles I got this morning. Now, this is an email, the Bloomberg Open. They send it out. One thing that caught my eye, man, that I wanted to pull up. And they send this out. This was out at 6:55 a.m. this morning. They're linking to a bunch of different articles they have going on. They're talking about options expiration. They're also talking about soft landing, quote unquote. Minneapolis Fed Chief Neil Kashkari said the FOMC will do everything we can to achieve a quote unquote soft landing. But I'll be honest with you, I don't know the odds of us pulling that off. Economists see a slowdown at best with a growing risk of contraction. But a bold call by Bloomberg Economics sees U.S. growth outpacing China's this year for the first time since 1976. China's dealing with some serious woes, man. Now, just take a look, though, at how things have progressed from where we were 5 months ago, folks. This is why we're going to be dealing with so much volatility. Okay, because you put them in and you know 4 months, folks, yes, it's very possible. 50 basis point hikes, get the job done. We start seeing the data showing that inflation is taming. But just look where we were at the beginning of the year. Forecasts for U.S. growth and inflation later this year and beyond have been deteriorating rapidly. You have the growth rate, and this is the expected growth rate for the fourth quarter of this year. Now, this is not going out 2 years, 3 years, 4 years, folks. This is saying in January the expected growth rate for the fourth quarter of this year. While that growth rate has continually been slashed from about 3.25% maybe down to now just 1.5%, okay, growth for fourth quarter this year. At the same time, inflation expectations for the fourth quarter of this year, we're putting that number at about, what is that, just shy of 3%. Do you remember a world where we were looking for under 3% inflation at the end of this year? It's possible, folks, but right now, the market's looking for almost 6%. You put those two side by side, it helps explain a lot of what's going on in this market, man. And it should give you a little bit of an indication, folks, of how wrong the market can be over a period of just, lost my charts, did you? Okay, I'll try and reset it for you. Hold on one second. Let's reset those charts there, throw it up. Throw up there. Hopefully you got me. Expected growth rate in Q4 gets slashed from 3.5% to now 1.5%. At the same time, you have inflation ranging from just under 3% to 6%. These are expectations. We're still not in the fourth quarter. They can change, okay? But keep in mind how wrong the market can be. Keep in mind the risks that are going on in this market, trying to analyze where we're going to be when you talk about growth, when you talk about inflation. It's going to be some volatile times, folks. Even if we don't see a deep recession in this market, this is a period of extreme volatility when these numbers can change so dramatically. Pay attention, folks. It's a big one. All right. Back to some of the articles I had pulled up here, and they're a little bit general, and I'm going to jump to, again, fears of recession are reshaping the bond market is what they're talking about, okay? Now, there's a couple different things you can go over in here. Before I do, going back to the big take of things, losing streak, this is the 7th straight week, folks. Look at where we are from 2020. We've had nothing like that going back to there. Global stocks, worst stretch in weekly declines on record. On record, folks. We've been breaking records left and right, but I would be paying attention to these in a big way. You got war, you have supply chain issues, you have U.S. growth outpacing China growth. Okay, and you have bond yields now changing things as well. You had quite the spike going higher. You've now pulled back a bit. Benchmark Treasury yields remain trapped below 3% this week as investors across a range of assets, fixed income and otherwise, grow more and more concerned that the U.S. is likely to go into recession. I mean, what I take out of all these articles, and that's the point that I was going to make trying to pull all these up, and I could go through every word in this article. It's a great one out here. This one is talking about the weekly fix, fears of recession are reshaping the bond news market over at Bloomberg. You can Google that and find it out. This one's out earlier this morning, okay? Recession overtakes inflation, okay, in terms of the fears. Inflation is one thing. Recession is an entirely different thing in terms of an economic slowdown spurred on by inflation probably, all right? But just keep in mind how wrong analysts have been over and over. When people try and tell you that with certainty of anything, that inflation is going to come down, 50 basis point hikes are going to get the job done, you hear all of that. I would focus on those charts I just showed you with how wrong people have been when you talk about just this year, folks, looking for growth estimates for the fourth quarter, looking for inflation estimates for the fourth quarter. You couldn't be more wrong. Yeah. So not exactly certainty as we go forward in a very uncertain environment. Stay tuned, folks. We got some equities to take a look at. S&P's up more than 1%. We'll be right back.
In a time of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Welcome back, folks. We got the S&Ps positive by 36 points right now. NASDAQ positive by 146. We're going to get into some individual equities later in the program, but jumping around real quick. Last night, Raw Stores paying the penalty, man. Down $22 from $92 retail, boy. It's a tough one. We'll get into their numbers, but pretty remarkable when you look at the moves that we've had. Walmart sitting barely positive by $1 this morning. Target sitting down at 154. No bids at all in these equities following their earnings misses in dramatic fashion this week. All right, jumping back to general talk, okay? Now, this article here is out this morning, and it's talking about, again, on Bloomberg. They have some great information on Bloomberg, folks. You know, a lot of it is a paywall, but I encourage you. It's some of the best information that I read in the market, and I read a lot of different stuff out there. Mass outflows hit every asset class as recession fears climb. So what this is talking about is equity funds had $5.2 billion in outflows in the week of May 18th, led by redemptions from mutual funds, according to Bank of America. Bond outflows reached $12.3 billion, with only treasuries and government debt seeing additions. Now, some interesting statistics down here. Global stocks have lost nearly $12 trillion in market value since the peak in March, as investors dumped risk assets at first. Now you got everything getting dumped, right? And they talk about, you know, you got analysts at Goldman Sachs, you got analysts at JP Morgan. Fears of an imminent recession are overblown, is how they surmise. And the likes of Morgan Stanley and Bank of America say that the equity market route has further to go, though. You got people on both sides, man, so you got to make the decision for yourself. And some of the numbers in here, so let's see, who's Harnett in here that they're talking about? Yeah, so this is, while Bank of A's custom bull and bear indicator tumbled to an unambiguous contrarian buy signal for stocks, strategists led by Michael Harnett reiterated their recommendation to sell any bear rallies. The S&P 500 has attempted to recover this week after flirting with bear market territory, but the bounce has proved short-lived, and the benchmark is set for the longest weekly losing streak since when? 2001. Now, these are the numbers here. So, in the 19 U.S. equity bear markets over the past 140 years, and here's what I'll say, folks, every bear market is different, okay? So taking the average of what the market's done over the last 140 years compared to what we're dealing with right now might not be indicative, but it is important to have some context of what happens in history when the markets really get a good pullback going. The S&P 500 saw an average decline This is an average decline over a sample of 19 U.S. bear markets. That's a pretty decent sample. 37.3% with an average duration of 289 days. If anything like that plays out, the bear market would end in October, 5 more months, with the S&P 500 at 3,000. 23% below current levels. I'm not saying it will go there, folks, all right? And I really don't think it will, but we don't know where it's going to go. The influences in this market shaping things in terms of China, supply chain woes, very difficult to peg the future. What I would be doing is trying to analyze the level of risk that you associate with each probability. Don't go all in and say there's no way we're going to get a recession. Don't go all in and say the country's screwed, the world's screwed, there's no way that we're ever going to pull out of this thing. We're going to be dealing with, $10 oil forever, okay? Don't go into both sides of that. Try and assign a probability to each possible outcome, because that's what you should be doing, because you can't be certain, folks, okay? Try and assign a probability to the outcome, and there is a severe probability that the market goes lower than we are at right now, and that is a very reasonable case. When you say, we're just talking about the average, just take the average. Now, stocks got very bubbly. It's not out of whack to have an average pullback that we've seen 19 times over the past 140 years. Folks, if you average that out, what is that? That's more than one every 10 years. Now, 3,600 is the new bull case, is what this gentleman wrote in a note referring to the S&P 500 level, which would mean 7.7% downside from here. Now, he's giving you the bear case, okay? But take it for what it's worth, because it's something to keep on your radar in a big deal when you talk about the moves, the possible moves. Not a lot of people saw 3,000 possible when you had the S&P sitting at near 4,800 to kick off the year. But not a lot of people saw 3,900 possible in May when we were sitting at 4,600 coming into April, okay? 3,100, folks, get you just below where we came into COVID. With the way that fears got overblown, with the market that we came into this COVID with, okay, we didn't come into COVID with a bear market. We came into COVID at a price level of 3,200 after trading straight up for 12 years, 11 years maybe, right? The year before, we were sitting at 2,200. What if I had told you in December of 2018, when we got quite a pullback in the market and the S&P was at 2,300, that in a year and a half, we're going to have a pandemic that shuts down the entire globe, that disrupts life we've never seen possible. We're sitting at 2,300. That pandemic is going to hit in February of 2020. It's December of 2018. The S&Ps are at 2,300. You only got about 14 months before the world gets a shock like we've never seen in many of our lifetimes. But guess what? Don't worry. By the end of 2022, the S&Ps are going to be trading at 3,000. And we're trading at 2,300 right now. We're trading at 2,400. It's important to have context of where we've come from. I think a lot of people would be very happy knowing the future, sitting at 2,500 in the S&P as we kick off 2019, somebody telling you that the pandemic is going to hit us in about 14 months from then, and then saying, don't worry, within a few years, though, we're going to go from 2,500, and the markets are going to be up 20% from where they are to kick off 2019, and we're going to be sitting at 3,000 comfortably. Yeah, a lot of people would be very comfortable with that pricing. But you get a run up to 4,800, the market goes from, it's almost crazy to say, folks, the market goes from 2,100 up to 4,800 in less than 2 years. And now we're sitting at 4,000, 39, 38. So be aware of the possibilities and try and, manage your risk according to some of those possibilities. And 3,000 is just an average bear market right now, folks. And I just laid out the contextual case of why when the S&P was sitting at 2,500 at the end of 2018, 3,000 would not seem that bad. This is not a world is ending scenario, folks. The world was not ending when the S&P was at 2,500 to kick off 2019, and it would not be ending if it was sitting at 3,000 to end 2022. We've seen much harsher bear markets, okay? Much harsher. So be prepared for those possibilities. It's almost amazing to talk about. All right. What else we got going on? I guess we got to talk about our man Elon Musk, man. He just never stops. So the story comes out that somebody had accused him of inappropriate behavior, to say the least. I think it was 2018. They ended up paying $250,000. He's out there on Twitter waging war, man. You got Tesla up about $10. I tell you, folks, if I was like a long-term believer in Tesla, I'd be real worried about Elon's attention span going on right now and whether he is really fully dialed in on Tesla. One of the things I said prior is that Elon is a brilliant man who has changed the world. And I think a month or 2 or 3 months back, I started saying, what would prevent him from just moving on to the next venture, moving on to the next company that can change the world, as in Tesla probably reaching the point that, we'll finish it up a little bit, but his attention is not on Tesla right now. That's my opinion. We'll be right back, folks.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, folks, we got markets open right now. It's option expiration. We got markets up 35 points. Man, you talk about a day that could have some volatility. We're coming into the 7th straight week of negative action in the markets. We're coming into option expiration. We're coming into an S&P that traded down 240 points from where we were at the end of Tuesday to Thursday's low. And since then, we're up about 80 points from that price level. You take a look on a Fibonacci basis from the highs we had at the end of the close of Tuesday action to the lows of where we were on early Thursday, right at that 382, folks. Be careful, man. All that was the positive action from early Thursday to where we were pre-market also coincided, folks, to where we were at p.m. Eastern time yesterday when you got to sell off, right? Not a coincidence, in my opinion, that we're right up at the 382. That's the level we were at pre-market. Yeah, we can break through that level, but keep that price level about 39.50, 39.46 on your radar. Okay, jumping around to what else we got going on. If you haven't joined the Tigers Den yet, folks, at TFNN, please come check it out. I'm in there myself, looking at some great information as I'm doing the program. Right on the front page of TFNN, the Tigers Den Trading Room, 1 year for the whole year. That's it. There's no strings. There's nothing extra you got to pay in there to be a member of the Den. $1 for the year, and that's really just so we're making sure we're not getting spam in there. We're not getting people just loading in their email address. And somebody just posted. Who posted in there? I was clicking on the article talking about Kathy Woods. That, yeah, it's no longer the number Taracoco. Is that how you pronounce it? No longer is Tesla the number one spot for ARK. So this is one site that I pull up occasionally. It's called kathysark.com. Not even aware of whether this thing is accurate. I believe it is, okay? I know you can just sign up to get her trades if you want emailed to you directly from her overnight. But it talks about the holdings. It talks about the trades. The number one holding now, Roku. And that's 8.38% weighting. Tesla is number 2. Zoom, number 3. I mean, all these stocks just getting hammered, man. She's got a big position in Square, in Teladoc, Coinbase. But interesting that Roku overtakes Tesla. I mean, Tesla is a fan favorite, to say the least, right? Roku, not so much the case. I don't think you got any Roku diehards out there. I'm sure you do. But Roku's up 1.5% today. The one thing I will say that I've been talking about for this equity, folks, Roku is a company now valued at $13 billion. I think they got 65 million accounts, people using their business. At some point, there is value to the gatekeeper for streaming being worth $13 billion. When you think about Apple has 16.5 billion shares outstanding. Apple could purchase Roku, and if the market assigned it $1 of price appreciation in Apple stock, and they might not, they might pull it down because Apple's spending money on an acquisition. I know that's the case, but you get the point, okay? This company is nothing. This company is nothing compared to any of the streamers out there, and the value that they may represent, I'm just speculating, but I'm guessing that there's a reason why Roku is the top position in her portfolio, and she takes a 5-year approach, folks. And I think that is one thing that you should all try and do when you're looking at least longer-term investing, because it's very difficult to look at a company. I mean, just take Walmart and Target, right? Who was able to peg that? But you might be believers in the long run that they're going to be able to raise prices, they're going to be able to make money, and they're still growing their business. Roku, on a 5-year basis, the world is changing pretty dramatically. Streaming is taking over. All right, cable boxes are going out. I even have cable in my house, but we use Rokus, so I'm a little bit biased, but we got like 4 or 5 of them in my house. We got one in the living room, we got one in our bedroom, and 2 in the kids' bedrooms. So that's 4. 4 Rokus active in the household. And yeah, on a contextual basis, $13 billion, you know, there is some value there. Now you jump to Zoom, you're talking about a company that does make money, valued at $27 billion. PE ratio listed right now, 21. It's not that bad as you get down to these levels, folks. So on a longer-term basis, pay attention to some of those. You got Zoom up 2.4% today. So volatile, these equities. You went from 83 to 92 just yesterday. Roku shares up 1.8% today. Tesla shares up about 0.6%. Let's jump around to some of the FANG stocks as you get the market pretty much holding on to the gains as we open. You got Amazon shares right now. They're up 1.7%. Boy, you talk about getting clobbered, man. Amazon. Google shares up 1.2%. I talked about Apple. Apple up an even percent right now to kick things off. Okay, let's jump down the line for some of the equities that have earnings. And we got some movers, man. We'll start with Foot Locker. Quarterly profit, $1.60 a share, 5 cents above, revenue slightly below. Same-store sales fell by less than half of what was anticipated. Foot Locker makes it through earnings season, and they're up 9%, man. You're up to $33. Excuse me, I guess when you're making more than the market was thinking, but be careful, man. Look at this stock. From $66, you chop around at 30. Yes, you are up 9%, but percentages off of small numbers can be deceiving, right? You're up 9%, but a $2.60 move, if it was trading at 66 bucks, would be a far less percentage move than it was even if you back things up to just last earnings cycle. You were trading at 41 bucks. You're trading at 32.84 for Foot Locker, but they do beat. They're up 8.5%. John Deere. They were talking about John Deere in the Tigers Den as well this morning. They are lower in the pre-market. We'll see how they open. Revenue missed forecast. They beat on earnings by 10 cents, $6.81 a share, as a jump in worldwide crop prices helped spur demand. They raised its annual profit outlook, but they miss on revenue. Jumping over to John Deere, DE is their symbol. There's a longer-term chart for you. They're down 7.7% right now. You're trading right back into the lower part of this consolidation here. That lower part, you're looking at about 331 maybe, where John Deere has found a bid going all the way back to where it was in February of 2021. But be careful, man. You started off this run at 170 in COVID. I'm not saying you're going back to there right now, but you break through this area, and you can see you got nothing in the way to where we were prior to COVID, as this market's selling off a little bit right now, folks. And we'll take a look at the short-term time frame. And there's your action on John Deere, continuing to drop. 336 right now as the market drops as well. DoorDash. So they got a $400 million stock buyback program going on. It's going to offset dilution stemming from its employee stock compensation program, and they're a little bit higher. So they're giving away a bunch of stock to compensate employees, and they're going to buy back stock to offset that, so there's no dilution. DoorDash, they've had some problems recently, to say the least. They're up 1.9% on that. You back it up, though. This is a tough one, man. You were trading at 257 in November. You're trading at 68 right now. You're barely off the lows of 57 that we made last week for DoorDash. So VF Corp, they were a little bit higher in the pre-market. They missed on the top and bottom line. They make North Face, Vans, Timberland. They raised the full-year earnings forecast. That's what the market likes to hear, though. Based on expectations, there will be no additional COVID-19 lockdowns that impact production, and that inflation will not worsen. That's quite an expectation. You know, even if you take COVID out of the scenario, inflation will not worsen. Well, it might not worsen. It might not have to worsen. What if it just persists? Nonetheless, VFC is their symbol, VFC. And they're up 3%. And they give it back on the open, man. Even if they guide and they beat on forecast, maybe the market's saying, hey, just the thing I said, are you guys talking about that you're making these assumptions off of waning inflation? Because if that's the case, then yeah, I can make a lot of bull cases if you tell me that COVID lockdowns aren't coming back and you tell me that inflation's going to go away. All right, yeah, Boeing, higher. They launched their Starliner aircraft, now heading towards the International Space Station. The uncrewed flight came after months of delays. I'm going to jump to Ross Stores, though, and we'll take a little break, and then we'll come back. Top and bottom line misses. Inflationary pressures have been exacerbated by the Ukraine conflict, and that is issuing conservative guidance due to uncertain macroeconomic conditions. They're probably getting it all out there all at once. We'll come right back and talk about Ross Stores, folks. Down 21%.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps right now. You're holding pretty steady. We got a little bit of volatility on the open. Right now, we're positive by 40 points right where we opened the session. You take a look on a minute basis just to see the action. We dive down to 39.20, and just like that, we get 20 points right back to 39.37 as the market opens with some fast market action. NASDAQ 100, we just traded down to 11,950. You're back up to 12,020. We jumped to commodities. Crude continuing to accelerate on a minute basis, folks. At 9:08, you were trading at about 109. You fast forward, what is that? Yeah, 35 minutes, and you're trading up $2 at 110.84. Had a great conversation with our man Teddy Kegstad, talking some crude, talking some Forex. If you ever want to check out any of the interviews, any of the segments, any of the shows that we do, folks, you can always head over to our YouTube channel, subscribe, go to the video section. Everything we do is archived right on YouTube. Any of the interviews, the guests we have, myself, my dad, Steve Rhodes, Dave White, Basil Chapman, Larry Pesavento, they're all archived right up there. Great conversation with Teddy. And one of the things I was asking him was, let's say you're bearish, let's say you're bullish. How do you trade this market when even if you're bullish in crude, and I was even saying you got to ride down, because I chatted with Teddy on Wednesday, okay, when crude was trading at, I'll pull up, 940, I was chatting with Teddy. Crude was right where it was right now. Well, you might be a bull, and I was saying, what happens when you get a $5 pullback? Well, look at crude. We just got a $7 pullback since I talked to Teddy, and you're already back to where you were. And one of the things he was talking about was maybe trading Forex, maybe trading some of those Forex pairings that move with the price of crude. If you haven't checked out the interview, folks, head on over to our YouTube channel. You can subscribe for free. You get notifications when we go live, and you can check out any of those interviews. And because you get this type of action, folks, I don't know how you would be trading crude right now in the futures market when even if you're bullish and even if you're right, you got to ride crude down $12 in a period of 48 hours before you might get even by the weekend. Crude could be back to 115 in no time. We just traded up $2 in the span of, 35 minutes as we're sitting at about 111 in the price of crude. We jump over to notes and bonds. We got volatility there as well. You got the 10-year right now sitting with a yield of 2.84%, the yield on the 10-year. All right, jumping around to what else I had going on there. We talked a little ARC. We talked about the bonds. Yeah, and the different equities going out. So as I had mentioned, you have some other equities out there with no numbers. You had checking in on the equities of the week, right? Cisco was down big on Wednesday. They catch a little bit of a bid today. You're up 2.7%. Be interesting to see where we go with options expiration today, for sure. You jump over to Uber and Lyft with DoorDash. Uber's up 2.2%. Man, they've really gotten punished in a big way. Jump over to Lyft shares, down actually today. Lyft, DoorDash, up 1.2%. We jump over to some of the equities with earnings. Foot Locker holding their numbers up about 8% right now. John Deere giving it back 7.9% to the downside right now for John Deere. Tesla shares basically flat. be careful of that one, folks. I mean, there's probably a reason why Cathie Wood no longer has Tesla as her top position. I did the conversation yesterday talking about Twitter, talking about Tesla. This is before it comes out, the allegations against Musk. Now that's going to, control his mindset on Twitter for a while as he tries to defend himself, rightfully so or not. But folks, here is the chart of where April 1st to April 4th, that was the weekend. That was the weekend that Elon disclosed late, of course, not following the proper regulations at all, that he was building a stake in Twitter. For some reason on Monday, it's always interesting to learn from these things, okay? Pay attention, because the market should have figured out, and it did on Tuesday, and it followed through dramatically since then. But on Monday, the market went straight up for Tesla. Well, folks, he was building a stake in Twitter. He was probably going to come after the company. He was at least going to be distracted. Nonetheless, it trades up to 1150. If you don't even take in 1150, okay, just if you look at where this stock was when you opened on Friday, you were trading at 1,080. To be exact, Tesla has, I think, 1 billion shares outstanding. Yes, 1.036 billion shares. Okay, so we'll call it 1 billion shares outstanding. Very simple math. Tesla's down about $380 billion in market cap just since Elon decided that he wanted to make use of time that he has, I guess, and go after Twitter. And then we all know how that's gone since then. I would be very wary, folks. And we'll leave it at that. But you look at where we are on this equity, you're right back to where we were in the beginning of 2020. And folks, if you remember, I mean, this equity came into 2020 at $91. We're sitting at 700. Okay? He's changed the world. He is a brilliant man. He's a brilliant businessman. I'd have some other few choice words that would not be so kind to him. With the lies and the way he's misled his supporters the most. I mean, I like to imagine, let's put it that way, if I was ever as successful as Elon and had as many supporters as he has, that I wouldn't be leading them down roads that I'm just going to burn them for my own personal gain, which is what he's done to so many people out there that believed in him, believed in Twitter. Yeah, and that deal is not happening, folks, not even close. Twitter back to $37. Now, Twitter, to find it on the place, there is, I'm going to put it on that daily, so you can see. So Tesla in that time has lost. Now, the market's pulled back dramatically too, okay? So that's part of it. I get it. But there's your jump on Twitter. Twitter now below where you were prior to that level. And that would make sense with the market giving it back as well. But not a coincidence, in my opinion, that even with Tesla getting a pullback to 700, that is no longer the main position. And probably for the reason that, Roku has some attractive levels when you've pulled back to $97, okay? Roku is at a price level you almost saw in October of 2018. You were at $77. You jumped to the likes of Zoom. Zoom's at $92. You were trading at 100 in 2019. Okay, a little bit easier on the valuations. I think I pulled up the PE on Zoom. What was it trading at? 21 or something like that. She's got a bunch of others that have had some max pain. Teladoc, I wouldn't be touching this one just yet, even if you believe in the future of telehealth. And, I do believe in the future of telehealth. But boy, they had a big wake-up call in their earnings. But she's a big believer. They're the top 10 position in ARK as well. Yeah, so she's looking for some plays that are still not at the lofty levels that Tesla is, because Tesla's still got a huge position for her. But you look at the possibility of a pullback, folks. Yeah, it's still relative. Even the 618, and that's just the move it had from the bottom of COVID, you're looking at a move of almost 200 points lower, $200 lower from where you're trading at right now on Tesla. And this is an important level, man. You're coming right back to the lows of February after you accelerated all the way back up. Maybe that was a little bit of false rally to give it all up. It's a perfect storm out there for Tesla, man. I keep talking about it because be careful. He's got a lot of fans, and I understand why, okay? But this stock is still dealing with some pretty crazy multiples when you look at where it's been, where it's gone, and what is the focus of the man at the helm. Because I just don't see him so ferociously focused on this company anymore like he once was, folks. I mean, he was just ferociously focused on Tesla succeeding when it was really facing a period of tumultuous volatility that they could have failed. That's not the case anymore. Tesla's around forever. They changed the world. He doesn't need to be as ferocious because they've cemented themselves to some degree. All right? And I'm generalizing. I get it. But be careful, man, of that equity, because you're still dealing with some lofty levels at $700. All right, folks, stay tuned. S&P's up 29. NASDAQ 100 up 102. We got crude at 110 and gold at 1837. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. I've been talking about Tesla. Not a coincidence, in my opinion. Tesla goes negative right now, down 0.7% as you got Mr. Elon Musk dealing with another distraction, to put it lightly. Be careful of that equity. S&P's up 33 points right now. NASDAQ 100 up 133 right now. You jump around to other news I saw out there. Interesting when you talk about trying to navigate promotional plans. Grubhub, not exactly getting it done. So they put out a sale out here. That they had $15 off, basically entitling it a free lunch is what they call it. Grubhub tried to win New Yorkers' hearts and wallets with a free lunch promo on May 17th that went awry. A surge in orders resulted in delayed or absent deliveries that left eateries overwhelmed, workers in short supply, and tens of thousands of orders canceled. Yeah, I mean, you tell somebody you'll drop off a free lunch for them, sure, sign me up. At lunchtime peak, they were averaging 6,000 orders a minute. It sucked, was the quote. So you got $15 off between 11 a.m. and 2 p.m. And this is where they just didn't calculate anything, right? They give away a lot of money. Basically, all it did was overrun every business. Overrun with orders from Grubhub's free lunch giveaway, 150 orders in 3 hours due to the lack of drivers. The restaurant had bags of orders that were never picked up. The restaurant took to social media to tell diners to come pick up, to to come to Astoria, dangling free ice cream for those that came to pick up the meals. A small percentage of customers came in. That's where you just got to have good management, folks. You're going to see winners and losers in this market when you're trying to overcome an extreme period of volatility, and that is just one of those issues that, not well thought out when you think about too good of something going wrong. All right, we got the NASDAQ holding on to the gains, but giving it up just a bit. We're off 0.8%. We're up 0.8% right now, but on a 5-minute basis, you see the chop, folks, and we're right near the bottom portion. We got a long day to go. It is options expiration. We got the S&Ps up 30 points right now, but for some context, folks, let's take off some of these lines real quick as I end the show, because all I want to say is there's your pullback this year. Can you even find the bid off this bottom? We are sitting right near the bottoms of this market, folks. Call it 3,900. We're trading at 3,927. Thanks so much for starting your trading day with me. Stay tuned. Basil's up next, folks. Larry live at 11. Fast Market at 12. Steve Rhodes, Dave White, Tom O'Brien this afternoon. Have a great Friday, everybody.